Have you ever been driving down a highway and suddenly you see the signs change? For miles, they've been pointing north, but now you see the exit that clearly takes you south. That sudden change of direction, that moment where map no longer matches what you've been following, is exactly what traders call a structure shift. So what is a structure shift? In simple words, a structure shift happens when the sequence of highs and lows that define the trend changes direction. If price was making higher highs and higher lows, but suddenly breaks a key higher low, that's a shift. If price was making lower highs and lower lows, but suddenly breaks a key lower high, that's a shift too. Think of it like dancing to a song with a steady rhythm. You are moving to the beat, everything flows. Then suddenly the DJ changes the track, the rhythm changes, and if you keep dancing the old way, you look out of sync. A structure shift is the market's way of changing the beat. Now, why does this actually matter? Because structure shifts are the very first sign that a trend might be ending or reversing. They are like footprints that suddenly point the other way. If you learn to recognize them, you stop trading with yesterday's bias and start adjusting before it's too late. Here's the technical breakdown. In an uptrend, price prints higher highs and higher lows. As long as each new low stays above the previous one, bulls are in control. But the moment price breaks below the last higher low, with conviction, a structure has shifted. The market is telling you buyers just lost a key battle. In a downtrend is the opposite. Price keeps printing lower highs and lower lows. Bears are in control. But the moment price breaks above the last lower high with strength, that's a structure shift upward. Sellers just lost their grip. Here's an everyday example. Imagine a basketball game where one team dominates for 3 quarters. They keep scoring, building momentum. Then suddenly the other team steals the ball, scores back to back and breaks the rhythm. That moment doesn't guarantee a win, but it's a clear shift in momentum. A structure shift is the market's version of that. Now let's separate structure shifts from the other concepts. A break of structure usually confirms continuation. Price breaks a swing high in an uptrend, and the trend keeps going. A structure shift is different. It's when price breaks the wrong swing, the one it wasn't supposed to break if the trend was healthy. That's why traders also call it a change of character. Why do structure shifts happen? Often because liquidity builds up around key swings point. Big players push price just far enough to trigger stops and reverse. Or simply because the market has run out of momentum in one direction and needs to rebalance. Wherever the cause, the footprints are the same. The rhythm changes and structure shifts. So how do you use this in practice? Step 1. You need to identify the current structure. Is price making higher high, higher lows or lower highs, lower lows? Step 2. Mark the swing that defines the trend health. The last higher low in an uptrend or the last lower high in a downtrend. Step 3. Wait. If price breaks that key level with a convincing close, you've got a structure shift. Step 4. Don't jump blindly. Wait for a pullback in the new direction. That's where safer entries happen. Here is an example with numbers. Suppose GBPUSD has been trending up, printing higher highs. The last higher low is at 1.2700. Price pushes to 1.2850, then falls sharply and breaks below 1.2700, closing at 1.2680. That's your structure shift. The uptrend rhythm just broke. The smart trader now flips bias, waiting for a lower time frame pullback to sell with the new bearish structure. The psychology here is powerful. Traders who were confident in the old trend suddenly get trapped. Buyers who entered late in the uptrend get stopped out as price shifts. Sellers step in aggressively, fueled by that trapped liquidity. It's like the crowd in the stadium switching sides. Suddenly, all the noise is going the other way. So, to recap, a structure shift is when the trend's rhythm breaks. In an uptrend is the break of the last higher low. In a downtrend is the break of the last lower high. It doesn't guarantee a full reversal, but is the earliest clue that the story might be changing. The difference from a break of structure is that it confirms continuation, while the structure shift warns of a possible turn. In short, a structure shift is the market's way of changing the song. If you keep dancing to the old rhythm, you'll be out of the step. But if you train your eyes to recognize the shift, you can adjust quickly, avoid being trapped, and often catch the very beginning of the new trend.